Hi everyone, it's 9:50 on the West Coast and 12:50 on the East Coast, so we're going to go ahead and get started. Hi everyone, I'm Jen with TSIB. Welcome to TSIB's Construction Risk Management Seminar, Day 4, our last day. We are excited to be here with you. I'm going to introduce our speaker in a moment, but first a couple housekeeping notes. This session is pre-recorded, but we will have a live question and answer at the end. We ask that you stay on mute and off camera during the session. Ivette Sedano is here with us today, so if you have any questions, you can post them in the chat feature located at the top right of your screen. Ivette will also be chatting with us during the entire presentation, so as you're watching the video, you can post anything in the chat. But again, we'll have plenty of time at the end for questions. This entire session, including the question and answer, will be available on demand on TSIB's YouTube channel. Lastly, the material covered during this session presentations are for informal purposes only. It should not be construed as legal advice. It is highly recommended you contact your attorney for legal advice. So without further ado, I'm going to introduce our speaker. This is Ivette Sedano, the Director of Group Benefits at TSIB, and she is presenting on employee benefits, the compliance overview, and important timelines. We're so excited to have you here with us today. Why don't you say a quick hello to everyone, and then we'll get started. Ivette, I think you're on mute.
Morning, everyone. Once again, my name is Ivette Sedano, and I'm with the California Benefits Division at TSIB. We're very happy you can join us, and let's get started.
Okay, I'm going to go ahead and play the video.
Good morning, everyone. Again, my name is Ivette. We are very happy to have you join us for today's session titled Compliance Overview and Important Timelines. In today's session, here's a quick agenda. We are going to go over a high-level overview on compliance with a focus on one of the most recent developments at a state and federal level with regards to the new COBRA subsidy law. And this was brought by the American Rescue Plan Act of 2021, also known as ARPA. And since that is foremost on our minds, we will talk about that more specifically and then go into the timelines as well to share some key points. So let's get started. Again, we're doing a high-level overview, and then we will break down the pieces of the puzzle as we go through the COBRA subsidy portion. And this is the newest legislative development, and we can talk about the details as we get through the slides. And some of the questions are, what is COBRA subsidy all about? So under ARPA, assisted eligible individuals, also known as AEIs, these AEIs will be entitled for free COBRA continuation, and that coverage includes the 2% admin fee for up to 6 months. So the subsidy began April 1st, 2021, and it will run for 6 months through September 30th for any eligible AEI. And we will explain again what an AEI is as we get through the presentation. Now, it's important to know that this bill was just signed on March 11th, so many employers and plan administrators are working on sending out the new model notices. There are some timeframes around that, and we will touch upon them as we get through the presentation. And there's also some model notices through the Department of Labor, which we will share that link with you as well on the upcoming slides. So who's eligible for the subsidy? Who qualifies as an AEI? Again, I mentioned we would explain what an AEI is. And an AEI is someone who loses group health coverage due to either an involuntary termination or reduction in hours. So other than for the reason of misconduct as defined in the Act, it has to be a termination that was made by the employer. And then this will entitle the AEI for the subsidy. So the AEI includes employees' dependents, which is the spouse, children, or the former dependent children. So for example, a child who aged out, And that is someone who no longer qualifies to be on the group plan, meaning, they're over the age of 26 in this case. So that would consider them eligible as well. There's also additional provisions with this option here. So there's the extended election period, and we will go back to that and elaborate a little bit further onto what the extension is and the way that it works. So it's something like if someone experienced a qualifying event before April 1st, 2021, when this new plan was enacted, they can either choose COBRA now for what's remaining of, their COBRA period. So say, for example, they're either not currently on COBRA or they let their COBRA lapse, they did not exhaust their maximum COBRA coverage period, then this will give them an opportunity to elect COBRA. So who is not eligible? Well, again, someone who voluntarily left their employment, they do not qualify. Or if the former employee is eligible for Medicare, or I should say AEI, because it could be a dependent, someone who is eligible for group coverage, that also means that it could be group coverage that's offered through a spouse, or someone who has already ended their expiration or reached their expiration of the maximum period of the former employer's COBRA coverage. So, for example, after termination, normally the COBRA continuation coverage is 18 months. If those 18 months run out in the middle, somewhere between April and September of this year, the subsidy will run out. So it's only up to the maximum period of COBRA continuation coverage, and other provisions apply, such as the group cannot consist of solely accepted plans, which that means they can't consist of just dental only enrollment or vision only enrollment and cut out the subsidy for the medical. So they have to be offered the medical alongside. And lastly, FSAs as well are something that does not qualify for that subsidy as stipulated in the ARP COBRA Subsidy Act. So individuals must notify, just a key note here, that their plans, if they become ineligible for any of the reasons mentioned above, that they no longer can participate in the health plan. Their ineligibility is subject to a penalty that could be imposed by the Internal Revenue Service as stipulated in the ARP COBRA Subsidy Act. Okay, so the extended election period. So we're back to this, and to talk about the extended election period, it's particularly important because it's going to require some administrative work on the part of the employer and the employer's COBRA administrator. So going back to the example of an individual who had a qualifying event, right? They were terminated prior to April 1st, and so they qualified for COBRA. In that event, the new subsidy, let's say that individual received a COBRA notice, and they didn't elect it. I'm going to use a very specific example. Let's say that they were terminated back in November of 2019, and they received their notice, but they did not enroll or they let their plan lapse. They basically still have the opportunity to sign up for 1 month of coverage because their election for the or their maximum coverage period would have ended in April. And so they would at least have that 1 month of coverage. The next steps would be that individual would need to be sent an election notice. Should they choose to elect the COBRA coverage would have ended April of this year. So it could be subsidized for just a month. And again, it's just going back to the rules of the time frame. And we'll talk about that as we, again, go into the presentation further. Now, this is how far back really you would potentially have to go. This is why I use this example, because sending out the new COBRA election notices to people who had previously not elected the medical or let it lapse are going to have that opportunity to enroll in the COBRA again. So that's not just the former employee, but also their beneficiaries. And so the COBRA coverage would begin April 1st. So these AEIs and their dependents must elect COBRA coverage within 60 days after they receive the notice from the plan administrator. I do want to mention that in no event will the AEI be eligible to extend COBRA beyond the original maximum length. So, for example, if they were only entitled to 18 months, it only will run for 18 months from the original qualifying date. So administrators must provide the revised COBRA election notice to the AEIs within 60 days of April 1st. So that means no later than the end of this month, May 31st. And we will come back to the new COBRA election notices and model notices provided by the Department of Labor so that you can have access to what that website is as well. So we're going to talk about what plans are impacted, what plans are eligible. All group health plans are subject to the COBRA new law for the subsidy as stipulated in the Act. So if the plan is subject to COBRA under ERISA, the Internal Revenue Code, IRC, or Public Health Service Act, PHSA, it is subject to the subsidy. The statute specifically excludes, though, health FSAs, so those are not included. Well, what about the mini COBRA law? So people covered under the state program, for example, in California, we have CalCOBRA. People would be covered by the continuation provisions under CalCOBRA and will be entitled to the subsidy, as this is stipulated in the new ARP COBRA Subsidy Act. Just a quick reminder, the CalCOBRA has two parts to it. So it provides coverage to and benefits to people who are employed by employers that are between 2 and 19 employees. And then the second part is that there's a state extension of the federal COBRA. So for those employers who have more than 19 employees. And for those, they must first exhaust their 18 months of federal COBRA, and they can get the additional continuation benefits under the CalCOBRA when they would qualify for the subsidy. Okay, so plan options. So additionally built into the law is a plan enrollment option. Employers can, they're not required to, but they could permit those AEIs to change their health plan elections to a lower cost plan than when they were previously enrolled in. Again, this is an option for employers. It's not mandatory. So how it works is employers who offer multiple plans like an HMO, PPO, and HSA, when they're sending out the revised election notice for the COBRA, they can give that option to the former employee to change to a different plan. Again, the caveat is that they must choose to change to a plan that would first be of equal or lesser cost, and also one that's offered similarly to situated individuals. So this would all need to be outlined also in the new modified COBRA election notice employer sent out, and they would have 90 days from that notice to make a decision, they being the AEIs, as stipulated in the ARP COBRA Subsidy Act. So who pays for the COBRA premiums? Well, we do know that the AEIs do not pay for the COBRA premiums because this is a subsidy for them. So who is? So according to the new law, the plan sponsor, usually the employer, is responsible And how it works is the employer will cut a check out of their own funds to the insurance company to cover the COBRA premium payments. And then the employer can receive a tax credit from the federal government for 100% of that COBRA premium, as it's stipulated in the ARP COBRA Subsidy Act. So the mechanisms for the requirement is through a payroll tax credit. So again, employers quarterly tax reports. So as this is stipulated again in the ARP COBRA subsidy law. So for more information, please visit the Department of Labor and the IRS website to have this information readily available. All right, so the new COBRA notice requirements, we mentioned we come back to this, and those model notices. So the AEIs will need to receive a new COBRA election notice within 60 days of April 1st. So for employers or plan administrators, mark your calendars. You will need to keep in mind that the notice has to go out before the end of this month, May 31st. And the plan administrators will be required to update those notices and send out a new round of them. And the statute specifically includes a mandate that these notices be updated to explain how the subsidies work. And of course, some other relevant information as this is stipulated in the ARP COBRA Subsidy Act. Again, those model notices are now available on the Department of Labor website. We will, as an employer, need to know who qualifies and going forward between April and September. So all of those AEIs who are entitled to the extended election period also need to receive a letter. Another new notice requirement recently developed towards the end of April was that before the subsidy ends, the plan administrator will need to notify the beneficiaries that their subsidy is ending. So they have a certain time frame prior to the subsidy ending that they will need to notify the AEIs that the subsidy is ending. Now, the Department of Labor just recently issued the model notices for that purpose, and the administrator will have to send those out. So that's more administrative work for employers, for the HR department, the benefits department, and it's just something to be aware of. And here is the Department of Labor's website where you can pull up the new model notices, and those are now again available on the website. Okay, we're going to shift into now timelines, which timelines consist of different things, right? But in this case, these next 3 slides I will explain consist more of HR, benefits, renewals, compliance, and the planning pieces. So here you will see that I provided an example of what the employee benefits year in review renewal timeline would look like. And typically the renewal timeline has specifics in there, and it's not a one size fits all. So the items on the timelines, for example, tend to change as we begin to grow, or we customize it to suit each client's needs. So just best practices. And the first of, I would say, these 3 pages really is something that speaks to strategy and renewal, because typically this is some, going back to budgeting and what takes place mid-year, for example, not just budgeting, but capturing like what is important, what is changing if the company is growing, and so forth. This next one is a timeline based on communication and open enrollment. Again, just a sample. It plays a huge part in the outcome and the success of the employee benefits open enrollment and planning. And this is also the reason why there seems to show more activities, because during open enrollment, there's many pieces that move, and You know, it's the vendors, it's the carriers, it's the HR department, it's the benefits, it's us. You know, there's more activities to plan around open enrollment. And that includes, you know, even placing the dates for open enrollment, whether they're virtual or on-site or both. So the TBD I want to mention, some questions had come up about what a TB, you know, what would be the time frame and who would come up with those. Well, the TBDs to be determined are actually decided from the previous slide, you know, after decisions for renewal had been made. And so planning takes place post those meetings, and the dates get implemented for all of these further actions with the employer. Okay. And then this third page is equally important as well, because this section will capture the compliance pieces, the post-renewal activities, due dates, and then the list will grow or tends to grow as the benefit offerings grow as well. So here we like to take a look and take into consideration items that happen throughout the year and post-renewal as well, the compliance timeframes. And for example, under line 23, as we see on this slide, there is a mention of, you know, reminder that the Medicare Part D notices need to go out by the employer, and this is each year. So this one is consistently there, but again, it's really tailored to suit each group's needs. Okay, we're transitioning into a different subject of timelines, and this is actually for individual plans, which is different from group plans. So this portion of the presentation pertains to individual plans and those timelines. So due to the pandemic, actually individuals who are currently not currently on a health plan, don't have health coverage, will have up until the end of this month, May 31st, to enroll in an individual plan. Typically, you know, that time frame would have ended earlier this year, but they've extended it. So if there are individuals who do not have coverage, they still have until the end of this month to enroll, and that could be through the exchange with Covered California, or off exchange, which is directly with the insurance carriers. And so that's a great piece to take back, and in case, you know, someone needs to enroll, that would be the deadline now. So we do see some of those extensions taking place at a group level when it comes to submitting an application, let's say open enrollment or a COBRA notice for the former employee or employees. So there's a little more cushion for now due to the pandemic, and it's a good point that I just wanted to put out there. With that final note, this concludes our compliance and important timelines presentation. And I've included a quick handy glossary that you can refer back to for some of the terminology or acronyms that were mentioned in this presentation. And we are going to be opening up for questions next. So thank you all for joining. Here's my contact information, and I welcome for you to reach out to me with any questions you may have. If you have questions that you thought of after the presentation, please reach out, and we will jump into the Q&A session next.
Hi, everyone. That was our presentation. Thank you very much. It looks like we have a few questions that came in. First question for Ivette. If someone is eligible for the premium assistance, how long will it last?
That's a good question. So it could last up to 6 months, and this again is for the subsidy, and that would run from April 1st through September 30th. However, it could end earlier if the AEI becomes eligible for another group plan, for example, through their new employer or through a spouse's employer's plan, for example, or if they become eligible for Medicare. The other one would be that it would cut short their subsidy if they have reached the end of their maximum COBRA continuation coverage period.
Thank you. Next question, speaking on AEI, is how does the AEI apply for the premium assistance under ARPA COBRA?
Okay, so if you were covered by a group plan, the last day of your employment or a family member's employment, on that last day, it could be because of termination or loss of hours. It could be a beneficiary, and to receive the premium assistance, you don't have to apply necessarily. It is, again, provided by the ARPA COBRA through the employer plan or a previous employer's plan. So that's not going to come out of your pocket as an AEI.
Our next question came in, how will the premium assistance be provided to the eligible AEI?
Again, it's not provided as a payment to the AEI. Instead, it's charged through the employer and reimbursed directly to the employer or plan administrator, and that comes to them through, assistance credit, COBRA premium assistance credit.
Okay, and it looks like we have another question. How much time does the AEI have to enroll in the COBRA continuation coverage?
Well, we have seen that in general, not just the subsidy type COBRA, but in general, the former employee or the eligible dependents have 60 days after they receive that initial notice. So that goes, it kind of works the same, or not kind of, it works the same. So those 60 days. I have seen sometimes where they make exceptions or extensions just because of the situation that we're in. But that's what it is, 60 days.
All right. I do not see any other questions, so I think that wraps up our session on employee benefits. Thank you everyone for spending time with us. Don't forget to join us for our last panel session on alternative risk financing and performance-based insurance solutions. That link can be found in the seminar program page on TSIB's website or the reminder of event email that you have received. Thank you.
Thank you, everyone.